Another way to understanding to avoid the randomness in the market is to, this market looks kind of random so far, but if you do your levels, you realize there could be a level that is up there at maybe here. We also have a level, you see this level here, 50% of the Fibonacci retracement, which could be a target for the next move. Let me mark it. We have also this level that is important. I marked it before that. The other level here, 62% retracement if we drag the Fibonacci from this level. So automatically you're thinking there is a retracement on the weekly that started earlier this week, but there's a chance for the market to go up to these levels, right? So we could say maybe we're looking at this level. Now, what's our job next, or maybe this target? What's our job? Our job next is to find levels on the smaller chart that will support our theory to anticipate the market. Again, we're looking at anticipation. So if I look at a daily chart, NASDAQ, and I put my Fibonacci levels from this level to this level, I see the NASDAQ just bounced from this area. That would have been a good area to go to use it in our favor, especially if we're looking for a move all the way here, right? And if I look at an hourly, of course, let's see what happened here. You see how the volume profile supported this rejection area too. It spoke into the next level of volume and rejecting it. If I look at a 60-minute chart, maybe it's even more vivid. You see how the market tried to poke into this low volume, went back up, filled this heavy volume again, and then came back down, and then poked and then rejected. So this would have been a good level to benefit from this move initially, and then moving the stop losses. Again, safe trading is key. This is on the NASDAQ. So just be aware of these levels. I would have not traded the NASDAQ here in the middle of this cluster. This is a continuation zone. I would have not traded the NASDAQ. Let me see. In this area, you see this whole area is low volume. It's no resistance, no support. This would have been good. Also, there's a level here. This could be good too. It all depends on the confirmation that you allow yourself to use for trading. Again, allow yourself, meaning a lot of people will trade without confirmation. And this is when the random trading mode takes over. This is not good, right? Patience is key. Looking at even a smaller chart, a 1597 tick chart. You see that? See, at this time we had also DRLs to help us. So there's a lot of ways to look into these volume profile levels and benefit from them. You just need to understand volume profile and how it works, and why these levels are heavier than others. And if I go back to the this level here, this is the daily. If I go back to it, or let's go to the hourly 60-minute chart, you notice in this area there's heavy volume, and there's reason for it. If I go back, see, this area was not as heavy before. See, it's turned to blue, but all of a sudden when the market came to it, it created that heavy interest, and all of a sudden below there's no interest, right? Even though the market tried to poke it, still there was no interest here. So market doesn't like, or price doesn't like, low volume areas. It's either going to reject or cover quickly, cover these areas quickly, right? These are points that you need to understand, especially as a beginner.